Hey guys, so today I'm going to talk to you about what exactly is a blue chip stock. So I've received a lot of queries with regards to this blue chip. So how did this name come about? Do you all know that this name actually came about from the casinos, right? The casino stock market, don't get it wrong, it's two different things altogether. But in the casino, the most valuable chip is the blue chip. And they use the exact same thing in the stock markets as well, alright? So typically the most valuable companies are considered blue chip stocks, right? So every country would have their own blue chips, right? So in the US, for example, companies like Google, Disney, Amazon are considered blue chips. In Singapore, companies like DBS, Singtel, or StarHub, these companies will be considered blue chip companies. So today I'm going to go through what are the pros and what are the cons of investing in blue chip stocks and whether it would be a right fit for you. So number one, generally blue chip stocks are considered to be safer stocks. Is that really true? Hey, it really depends. Typically, these companies are big companies with a very strong economic moat. So generally, these companies might be safer investment options. However, it does not always guarantee that these companies will not go bust, right? So in the history of times, companies like Kodak, which was once a blue chip, is today totally irrelevant. Companies like Nokia, for example, which was once a definite blue chip, one of the biggest mobile phone companies in the world, went completely bust. So it's not to say that blue chips are all very safe and you can just invest in these companies, right? So please make sure you do your own due diligence. Find out whether these companies can continue to sustain and grow their profits in the next 5-10 years. The question you want to ask yourself, number one, is this: will the business be able to generate future profits in the next 5-10 years? Secondly, the second question you want to ask is, can this company be replaced, right? Given $100 billion, can somebody else create a new company which can wipe this company out? If the answer is possibly yes, then you might not want to invest in these companies, right? So this is number one. And number two, the second con of investing in blue chip stocks possibly is because typically these stocks are of a higher price, right? So if you look at companies like Amazon or Google, you're looking at over $1,000 per share easily, right? So typically they are more expensive stocks around the world. So due to limited capital of some investors, they rather stick to smaller cap companies, for example. However, more savvy investors understand that if they go and buy good quality companies, at least they have the stability in the portfolio. These companies, if they are good solid companies, even after a crash, they'll tend to come back many more times, multiples of doubling and tripling their stock value even after a crash as well, right? Which is why I'm saying, right, if you choose to invest in, let's say, a mid-cap or a small-cap company, these companies might go completely bust. But with companies which are strong and resilient, they will be there to stay. Right? So ask yourself, which companies will be here to stay with us for the next 20, 30, 50, 100 years? And these are the possible good companies to invest in. Now, I hope you found this video useful, guys. And next time, make sure when you're investing in the blue chip stocks, you ask these two very important questions before jumping right in. Thank you, and I hope to see you in our next video. Make sure you click on the link down below to click on subscribe and the notification bell so you can get updates on our next video as well. See y'all!